Is watching the price of oil. Prices edged higher today after they slumped to near 11-year lows yesterday. Brent crude oil is trading at around $38.60 a barrel after it fell to close to $36 yesterday. And low oil prices good for motorists in South Africa. They will alleviate some of those inflationary pressures that Kate was talking about, which cause prices to rise. But the concern is that the current price, comparable to the price during the financial crisis, is a sign of weakness in the global economy.
The lower oil price is negative news for producers, especially those with high costs of production. But OPEC producers who decided not to curtail output on December 4 continue to make reasonable margins as their costs of production remain relatively low. Lower oil prices should be a welcome treat for consumers, but in the case of South Africa, a relatively weaker rand is likely to moderate any benefit.
Lower petrol prices, again, because of the currency impact and because of our importing of oil, we're not going to see the entire feed through like you would see if you were, say, a dollar-based buyer of, say, petrol or gas. So looking at it, we will see some sort of relief, but again, not to the extent that you would see overseas.
The US Fed is expected to start its rate hiking cycle tomorrow, this after a near 10-year hiatus. Analysts say low global inflation risk, due in large part to a lower oil price, means the intensity of the interest rate increases should be minimized. But that's little consolation for South African consumers, because we're heavy importers of dollar-denominated products, coupled with the weak rand, higher inflation and the higher interest rates that will go with it appear the order of the day. Nompumelelo Siziba, SABC News, Johannesburg.
Let's take a look at the numbers now. Steelmaker